let's talk about some things that we can do when the market is down, what type of trades you can put on, how you can adjust your deltas and things like that. And then once we discuss those few things, I'm going to show you a few adjustments, and then we can open it up for any questions or any problems that people have. I know it's a few members that are looking for potential help, so we'll use that for this during this pop-up live trading session. All right, so it looks like the market are basically near its lows. I know the S&P is near its lows. The Russell looks like it's near its lows for the day. We do have 2 more hours of trading, so it's definitely been a red day due to the directional move and the increase in volatility. The volatility is up about 25% today. So as option sellers, and if you plan both sides, you know, you're selling put spreads, you're selling call spreads, and if you have a big down move, it's going to hurt you a little bit more potentially on the downside if you don't have short deltas, because you're going to be dealing with that directional move plus the increase in volatility. When the market is going up, as you heard me say in the past several times, when the market is going up, you're only dealing with the directional move, and volatility is coming out of the market. So that allows you to deal with a directional move a lot better. You can actually be up because the volatility decrease could be outpacing the directional move. But when the market is going down, especially when it's going down, you know, 2+%, it's going to spike up that volatility where we see it here in this VIX, this fear index. All right, so let's jump into a few things that I want to talk about. When you are having a down market and you are trying to kind of keep your deltas in line, potentially keeping your buying power in line, you can go and try to do things that do not require any buying power and that gives you some short delta. So for example purposes, we have this position on with 17 days to go. We have these two 80-point wide spread. This is an 80-point wide spread here on the put side, and it's 2 contracts, as you can see. So that's currently at a 27 delta, right? So if we try to just do like a roll away, a partial roll away, not a partial, but a full roll away here, and just a small one, about 40 points. If we did this, you can see that if we did the 2 contracts, this is actually going to require a little buying power, right? So that's the 28, that's our yellow zone. So, and this, the Nasdaq is near its lows of the day. So that's going to require buying power. So I don't want to roll away, and I try to do a bigger adjustment and a bigger adjustment as well. That's still requiring buying power. So what I can do is I can go to this call side, and you can see that this call side looks like this is a 60-point wide spread on the call side, right? So if I buy this back, it's going to require some buying power, right? But if I decide, okay, well, I'm going to move this up. Let's say I decide to move it up to, for example purposes, a 8 delta here. And I just say we keep it 60 points wide. And when I do that, that is requiring some buying power, as you can see. If I do 2 of these, let's just see what it's going to do if I do 2 of those. If I do 2 of them, you can see that the buying power is now a credit. And if I make this an 80-point wide, because that is the width of the put side, and as I say, I want to even out the width on both sides, and I made this an 80-point wide, you're going to see that this is going to give me a little bit more buying power, as you can see, right? So it's going to give me $7 in buying power, and I'm going to get a credit for $175, right? So this is the type of adjustment you can do to get some short delta. It's not going to be a lot of short delta because you're trying to prevent the reversal. You're thinking about, okay, how much can the underlying, whatever you're trading, in this case the Nasdaq, how much can it go up in the next time frame that you're in this trade? Is this 17 days left in this trade? We're not going to be in it 17 days, but you have to kind of factor that in. Does it have the potential to jump back up in a huge way? What happens if it's up 400 points tomorrow, right? So if it's up 400 points tomorrow, that's going to be basically 15,200 or something, give or take, right? So that you'll still be about 400 points away from where it's currently trading at. So that's why I'm trying to do an 8 delta. You can see that the implied volatility spiked up. The expected move is about 420. So if you double that, that's about 820. So that's basically where this is at. It's almost about two times the expected move away. So what we're going to do is going to hit clear there. And then what we're going to do is sell this and buy this. And that's we're going to do 1 to start off with. And let's see what happens if we do 2. All right, we're going to do 2 to start off with. And because we just have to kind of do it this way, and it just makes more sense. We can't adjust this in concert using the TastyWorks platform. We talked about that in other videos that you can check out. But in this case, we're going to put that on. We're going to see if we can get filled before this drops some more. So what we're going to do is, let's see if we drop this to 485. That's going to give us about 180. No love there. We're going to kind of play with it a little bit, maybe go to 480 and see if we get, it's going to be 178. No love there. And one more time, I think we'll get it maybe at 175. But since it's the call side, it's not going to give us a lot of love. It's, you're going to have to give up something to get this, to get some short delta on this. All right, so that's 170. That's 475. Let's put this in at 470 and see if we can get filled there. Come on. Not going to get filled there. That dropped quite a bit now. The Nasdaq is continuing to drop. Each small point is hurting the move. I don't want to go any higher. So there we go. So we got that move. And this Russell was at the low here as well. So we finally got filled there. What we're going to do here is do the same kind of concept with the Russell, but we're going to go to 52 days out here. And what we're going to do is, you can see we have a no upside risk iron condor. This put side right here is at a 12 delta, which is our green area. And that is right now, that looks like that's a 40, it's like a 60 point wide spread, 2 contracts. So if we go to this call side and just say we want to stay around this 7 delta, and I think we said it was 60 points wide. So let's just see what that looks like. So that's 60 points. You can see that that's giving us some buying power. So we're getting some short delta. We sell that. That's giving some short delta. So let's just go back down here just to make sure I read that right. That's 40, 60. Yeah, so that's 60 points wide. If we do this on the call side, 60 points wide at a 7 delta, the expected move is 160. So that will give us double that expected move as well. So this is what we're going to try to do on here. And you can see that it's giving us a credit and it's giving us short delta, right? So it's not affecting our buying power. Just in case this market continues to go down tomorrow or so forth, this is going to give us some short delta, and it's not going to hurt our buying power. So we're not going to get filled at mids. So, but we're going to definitely try to get filled at mids, right? So, and that is not going to happen there. The market is definitely falling to its lows. Hopefully we can get a kind of pull back up before the end of the trading session. So we're going to put this at 220, so we can get filled. All right, so we got filled there. So perfect. So that is a way to get some short delta. I want to point out some things that I put in Discord that you've seen, that you've noticed as well. We got some short delta by selling a micro future in the ES, and then buying a call in the ES. And this is what we did here that we shared in Discord. So let me explain what we did there, and then we'll jump into if you guys need any type of assistance and help and so forth. So in this case, what we did was, we looked at, this is the micro feature for the ES, it's /MES. We sold this, and this is $5 a point. And so it helps us make or offset some of our losses, $5 a point as the market drops, right? And then what we did was it's only 17 days left that we have most of the ES position in. So we went into this 17 days and we bought a call at the 30 delta. So this is the call we bought. And when we did that, it gave us, it gave us buying power, a credit of buying power. And you can see doing this again right now, it's going to give another credit of buying power of $919. If you're on the TastyWorks platform, you're not going to be able to do this in concert, and you might not be able to do this in concert on the Thinkorswim platform as well. You have to do it as two trades. So what you should do, if you can, is buy the call first, because that one you probably have to work a little bit. You're not going to get filled at the mid. This micro feature here, you're going to get filled really quickly on here. You don't have to really work this one to get filled. So keep that in mind. You try to get filled on the thing. You try to get filled on the thing that's more difficult first, and then you get filled on the other part. So that's what we did in Discord to be able to kind of offset. And what happens is, if the market jumps back up, this call that you buy is going to offset your hedge some. So you're not going to lose $5 a point, because this is going to be offsetting that. And if it shoots way back up to this area, this 44.25, then this call will offset the losses, because you'll be making one on the call, losing one on the micro future, so to offset each other. So that's why I'm buying that with 17 days to go, to see how, just to get some short delta, get some buying power, and see if the things kind of settle down. I think this is a really outside, type of move today that wasn't obviously expected. This is a big down move, 2% for the indexes, 3% for the Nasdaq. That's a pretty big move. If we go and look at our Dorian Way 12 here really quickly, and you kind of look at some of these stocks, well, everything is being sold. Nothing is being saved today, and a lot of this stuff is obviously going down based on how much the Nasdaq is going down on the overall, right? 3%. You can see right down by 6%. Yes, Steve.
Brian, this hedge position you put, it gives you negative delta?
Yes, it does.
Okay, and that's
selling the micro future and then buying the call. So selling the micro futures is negative delta. Buying the call at the 30 delta is giving you positive delta, but overall it's negative delta. What was that question?
So sell one contract first and then come in and do buying the call, or was that, which way did you say to do that? I'm so sorry.
Do the call first. Buy the call first, because that might be a little harder to get in, and then sell the micro future, and that'll give you some short delta.
Okay, thanks.
Okay, you're welcome. All right,
is this one leg?
This is a two-leg type of a hedge, but you have to do it as two separate things. You might be able to do it on the Thinkorswim one as one trade. I doubt it. All right, so but this is only a 17-day type of hedge. It's just trying to see if things settle down with the market, and I do think it's really overdone today, but you have to just play you have to play the deltas, and you can see for the most part all of these deltas in this account is all in the yellow or green area. So I'm not panicking, even though the P&L looks bad, as you can see today, right? So you can see this is bad, all of this is bad, but that's just the nature of the game when volatility spikes 25%. And if we sell off some more later in the day, then volatility is going to go up even higher, and we'll see what happens tomorrow. I know the Fed was supposed to be talking today, so I'm testifying. I don't know what's been going on. I haven't had the chance to take a look. But with that said, let me open it up for any help. I think Jose, you needed some assistance if you're on the call. All right, so if Jose is on the call, please unmute your mic and let me know what assistance you might need. Until then, if anyone else needs some assistance or have any questions, let's open this live pop-up session up for any questions.
Hey, O'Brien. This is Fred.
Hey, Fred.
Hey, can you explain again what you did with the micro futures? I saw you were kind of breaking up. I don't know if it was on my side or what, but the micro future, I saw where you bought the call. What was the other end of that trade?
Okay, yeah. So I hope that was on your end.
Yeah.
But with that said, what we did is, first of all, I'm gonna just delete this. We first sold the call here. Right? This sold the micro future. You go up to where it says, just like when you're buying stock, if you want to buy stock, you have to click on the ask to buy. If you want to sell, you have to click on the bid to sell. Well, in this
Right.
case, what we're doing is selling the micro future. This right here is the micro future to the ES. The ES, the /ES, is $50 per point, right? So it's pretty big, right? This right here, this micro future, is 10 times smaller. So the /MES is $5 a point per point. So it gives you 5 short delta if you were just putting this on by itself, right? So what I did, just in case this market jumps back up, and it could, right? It could. I mean, we've seen that happen quite a bit. So to avoid getting hurt a lot if it shoots back up, what I did was bought a call at the 30 delta, right? So this is bearish when you sell this micro feature. This is bullish when you buy this call. And what's happening is that this right here, it doesn't say it's 100%, right? It moves it for dollar 100%. This option right here, because it's a 30 delta, moves 30% for every 100 or $1 move, right? Or 30 cents for every dollar move. Let me know if you're not following me on that. Okay.
I gotcha.
Okay, so perfect. So this is going to offset the losses to the upside by 30% by buying this call spread, and then eventually it's going to offset the losses on the if it shoots back up completely, because then this delta will change to basically being 1-for-1, just like this micro option, and then I will not lose anymore on the upside once it passes this 44.25. It's like if you understand a covered call, like selling a covered call, you buy an option at 100 and you buy some shares at 100 and then you sell a call at 120. Well, you get all the appreciation up to 120, but after that, they offset each other. You do not make any more money after 120. That's the same kind of concept here, but it's the different. It's we do not lose any more money after it hits this 420, this 44.25 here.
Gotcha.
So that is the the concept of what we're doing with that micro, and being by offsetting it, it gave better buying power for the position. So for example, as you can see here, it's still doing that. So if I sold, you see I sold this, it's requiring $341 in buying power. And so my theme on this live pop-up trading is, okay, what can you do what kind of trades can you do that require no buying power? And if you have a lot of buying power, then you should be doing something bullish, perhaps really far out. And I'll show you some of those trades here. But if you're trying to kind of put your deltas in line, but protect yourself from a reversal, a big, strong reversal to the upside, then you do similar stuff what I was doing here on that Nasdaq, selling those call spreads, but I was really far. I was still on the 8 delta, and then selling those call spreads on the RTY. I was at the 7 delta with 52 days ago. So giving myself a lot of room for the market to kind of bounce back, right? But in this case, I wouldn't do this as a standalone trade because it's requiring buying power, right? Unless I really needed the short delta. And then in this case, but since I want to get some short delta, but I don't want to require any buying power, I can buy this call, and you can see it's going to change it completely, right? That's like a significant reversal in buying power, right? It went from negative 300 and something to positive 800 and something. So you have to figure out ways to manipulate, buying power situations when you're dealing with portfolio margin or span margin, or even sometimes when you're dealing with regular T margin, because you have naked positions on or whatever the case may be. Even if you have spreads on, if it's going against you, your buying power doesn't change, but it could become a problem if your buying power is too close and you're trying to do some adjustments. So you have to kind of figure out things to kind of manipulate the buying power.
And this will differ depending on what holdings you have in your portfolio
100%.
as far as, okay. And
100%.
then additionally, if the ES positions that you have are farther out, say in the 30 days or so, can you still do this? Would you recommend that? Or yeah.
Yes, you can. Yes, you can.
Okay.
I know this is 17 days, but it's not this, it's not limited to this. You can do this if it was 60 days out or 100 days out, but it's just figuring out what works. And the only reason I did 17 days, Fred and everyone else, is because this position right here, is expiring in 17
Right.
days, and this, all these other positions are, you know, they're perfectly fine. They're longer days, and it's not requiring as much buying power and so forth.